Good morning, it's Market Day Report. So glad you're with us here on the final trading day of the week. No reports from USDA, so that means, well, can't tell you whether or not we've had any flash sales. But we will break down the markets after we run through what happened in the overnight session. We're starting with corn. Corn lower in the overnight trade, $4.21 a bushel, down 3/4 of a penny. Now, for the last 2 day sessions, corn has settled higher. For the past 2 sessions, beans have been higher, not counting the overnight session, where we saw a slip of 1/4 cent to 10.23.5. Wheat market, well, wheat is, the Chicago contract is running a 2-day win streak right now with old crop 5.17 1/4. 2.5 higher overnight, and July new crop at 5.59 as it settled a penny 3/4 higher. Hard red up 2 on the old crop, 5.01, July 5.52. It was 2 higher, and overnight trade for spring wheat mostly higher. Cotton market is struggling a little. 2 straight sessions in the red. 64.84 overnight, down 25. President, Midwest Market Solutions, is Brian Hoops. Brian, without any export sales report, what do we trade?
Good morning, Tony. Well, it's limited as far as what news we have from a fundamental standpoint anyway. So you look back at last week's closes, we're about even right now with last Friday's close for December corn. Soybeans are almost a dime higher than where we were a week ago, and wheat's a couple cents lower. So I think that's one thing trade will be watching as we get into the closing bell here is, can we have a type of a weekly reversal or weekly higher close, especially in soybeans, which had the bullish daily reversal earlier this week. Now, the funds, interesting enough, have been very strong buyers last couple days of soybeans. They bought about 15,000 yesterday. And according to our research, it suggests that they are actually out of their net short positions now and just slightly net long. That's not true in any other commodities, but it is true in the soybean market. Of course, a lot of that is tied to what was implied earlier this week, that President Trump, President Xi would be meeting sometime in the next 4 weeks to talk about a trade agreement, and that would be a priority, would be signing something to secure U.S. soybeans. So, that's the number one reason why you would want to re-own these crops if you are making cash sales, is because of that unknown, that trade agreement that may happen at some point in time down the road. We don't know exactly when or if it'll happen, but it does suggest that prices have a lot of upside potential if something does happen. Now, the old Informa group, and if you go back as far as I do, the old Sparks group, now called SP Global, they were out with their private estimates yesterday. I think StoneX was out the previous day. They lowered their corn yields, StoneX did, and S&P Global also lowered their yield estimates. So they dropped their corn yields down from that 189 down to 185.5 yesterday. That's a pretty sizable drop. And they also lowered soybeans from 53.8, that was their estimate, down to 53. So they are seeing lower yield potential for both corn and soybeans. That kind of lines up with what we're hearing is much lower yield potential for corn from producers that are actually out there in the fields combining. And soybeans are coming in very strong, so they may not see much of a yield drop. In fact, maybe even a yield increase if we get a USDA report at some point in the future.
We're talking with Brian Hoops, Midwest Market Solutions. Quick break, back with more on the other side. This is Market Day Report. When we look at the livestock complex, this is one that's been, performing really well year to date. Coming into the session, 19% gains for live cattle, 34% for feeder cattle. These are year-to-date gains, and the hogs 21%. But after the close yesterday, and we had a lower close across the board, we're giving back some of those gains. Let's start with live cattle futures first. And again, we don't trade these in the overnight session, so this is how we settled on Thursday. October, which will expire in a few weeks at 230.52, down 57. $1 higher on the most active December contract at 233.50. But also notice that trade range on December live cattle, just $2. 236.12 on the February. It was $1.05 lower. And cash trade, yes, in the north, but nothing in the south. Our guest, Brian Hoops, will help us out with that in just a moment. Feeders, same story here with October set to expire in a few weeks at 354.70, down 427. So just skip on to the November. That's where the action is. And the trade range, $5 here, 352.75. We settled 485 lower. And again, we've been watching a pretty good run in this hog market, but in the last week have given up, a couple of dollars here? 98.65 on the October, 22 higher, but the December down 12 at 86.77. Brian Hoops again, President, Midwest Market Solutions. Let's start with the cash trade first. Some in the north, but they're passing in the south on the bids.
Yeah, they certainly are. We did see some bids finally develop yesterday midday when the cattle futures were down, and it wasn't really enough to stimulate any type of cash movement in the Southern Plains. They just are holding out for a little bit higher money. We did see some very light northern trade. It was steady with the earlier in the week. 230 on a live basis, 360 on a dress basis. That is going to be down about $5 from a week ago. So it looks like northern trade, where the supplies are a little bit larger, that's where we're seeing most of the weakness with southern feedlots. They're holding out they're trying for steady money. Hopefully they can get it. I don't know that they're going to be able to by the closing bell today. It probably depends on how the futures market wants to react. Now, packer margins pretty deep in the red, and they continue to fall. They've lost well over $130 this week. They're down to about $230 now in the red. Packer margins suffering because these cutout values cannot catch a break. They just keep free falling here. And Packers really haven't cut their kills significantly, not enough to support the box beef. There was some talk that maybe as we end September, get into October, at least the box beef would stabilize. So far, that has not been the case, as we were down well over $5 in the choice yesterday by the close. So we'll keep an eye on those things. The hog market, I think, is one that could see a decent rally in here. We opened lower and closed well off lows of the day by at least $1.
Let's talk WTI. Go to the energy sector here. Could we be staring at under $60 for a barrel of oil?
I certainly think we could. Yesterday's close was certainly bearish. There was a lot of support around 61.05 on the November contract, and we traded below it, closed below it. Now we're seeing a little bit of a bounce, but that 61.05 will act as resistance on any rallies here this morning. Very likely we're going to trade in the 50s here in the middle of the fall, as we're just very concerned about demand from a U.S. standpoint here, and very possible we'll see more weakness in the world economy as well.
And we're watching gasoline futures move higher. Now, WTI has been lower for 4 straight sessions. Gasoline's been lower for 4 straight sessions. Here's a look at diesel prices, and finally, nat gas has been on a run up 2 consecutive closes. We're lower, though, right now as we head into the trade day. Brian Hoops, President of Midwest Market Solutions. Brian, thanks. Have a great weekend. So